CATEX-TV. I'm Tom Bailey in London. It's 12:30 p.m. in Bermuda, 11:30 Eastern Time, and 4:30 p.m. in London. Today in history, on this day in 1850, Zachary Taylor, the 12th President of the United States, died of acute gastroenteritis just 16 months into his term. He was succeeded by Vice President Millard Fillmore, who then became the next President of the United States. And on this day in 1918, in Nashville, Tennessee, two passenger trains collided head-on, killing 101 people and injuring an additional 171. It is considered the deadliest rail accident in United States history. Now for the news. Gulf of Mexico offshore energy underwriters are feeling the heat as they look to balance the books amid a shortfall in demand. Increased rates, higher deductibles and lower caps in the primary market have led offshore energy companies to look to retain more, if not all, of their risk. And this has meant primary insurers that bought reinsurance at January 1 renewals, when the cost of cover shot up following high losses in the 2008 hurricane season, have been unable to recoup their rising costs from the end buyer during the latest batch of renewals. Paul Dawson, an energy underwriter at Beasley, in a recent interview stated that most offshore wind cover for the Gulf of Mexico has now been written for 2009. He said most risks have seen some form of rate increase, which was a direct consequence of claims inflation, reinsurance costs which increased remarkably at 2008 year-end, and the cost of capital. But he said the recession and its impact on the price of oil, and in particular gas, has led to about half the number of drilling rigs being in operation compared with the same time a year ago. He went on to say that levels of premium are lower because the level of exposure is reduced. Some insurers decided not to buy wind cover because of the cost, and others have bought what they could afford. Insurers have generally been buying smaller limits of cover with higher retentions, which reflects a smaller number of assets. Heavy losses underwriters suffered at the hands of Hurricanes Ike and Gustav in 2008 have also led to very few insurers offering subsea coverage as standard in their offshore energy policies. As a result, insureds have been left to consider whether to purchase bolt-on cover, which has very high rates, something in the region of 100 and a cap of about $100 million, or to self-insure through captives or risk retention in some other form. Well, sticking with the hurricane view of the world, this year so far has been very quiet on the hurricane front. However, a depression has formed in the northeast Pacific. Depression Blanca is currently gaining mild wind speeds of about 26 knots. Blanca is currently 672 nautical miles west of Cabo San Lucas in Mexico. We'll keep you posted on the progress of the Depression Blanca and all other hurricane activity here on CATEX-TV. The development of an El Nino weather pattern is increasing, and at this stage may be a medium-strength event. It, however, could take months for it to be officially declared, according to Australia's Weather Bureau, which said, "We are warming reasonably rapidly." The models tend to suggest something reasonably warm, but it doesn't look like it will be at the levels of the 1997 and 1998 event either. The last severe El Nino in 1998 killed over 2,000 people and caused billions of dollars worth of damage to crops, infrastructure and mines in Australia and around Asia. It struck in the middle of the Asian financial crisis, which roiled financial markets. India, one of the world's biggest producers and consumers of everything from sugar to soybeans, has already experienced weaker annual monsoon rains. Its faltering sugar crop is a prime reason why sugar prices are rising at the highest level in 3 years. An El Nino is also a major risk to wheat production in Australia, palm oil output in Indonesia and Malaysia, and rubber in Thailand and Malaysia and Indonesia. Output of palm oil and rubber has already fallen this year due to adverse weather. The 2009 El Nino is developing as the world struggles to emerge from the worst economic conditions since the Great Depression of 1929. And El Nino means little boy in Spanish. It is driven by abnormal warming of the eastern Pacific Ocean and creates havoc in weather patterns across the Asia-Pacific region. It is associated with drought condition in parts of Australia and Asia, and wetter than normal weather in parts of South America. Morris Hank Greenberg has won his case against AIG when the jury decided his Star International did not breach a trust when it terminated a long-term compensation plan for AIG staff. The jury's verdict, which came after 4.5 hours, is advisory and still can be overturned by Judge Jed Rakoff, who is expected to make the financial decision by next month. Liz Boyer, spokesman for Psycho, said the company was gratified by the jury's verdict and the jurors' quick and complete rejection of the outrageous personal attacks on Greenberg's character by AIG and its counsel. AIG said it was disappointed by the verdict and would await the court's final ruling. It said, "We continue to believe in the merits of our case." A female juror who declined to give her name said afterwards that she believed the AIG case was weak. And David Bowies, the lawyer for Greenberg and Psycho, said the quickness of the jury's decision reflects the simplicity of the case. The trust AIG is alleging no one had ever heard of or seen. No document mentioned it, and I think the jury recognized that. Another juror who wouldn't identify herself, said she found no evidence to support AIG's claim that a trust was created solely for AIG. A third juror, who also requested anonymity, said Rakoff's legal instructions on the creation of an oral trust left them no choice but to reject the insurer's claim. The panel of 7 women and 1 man rejected arguments by AIG attorney Ted Wells that Greenberg lied repeatedly in testimony and that Psycho fabricated documents. We'll bring you the result of this case when the judgment finally comes through in about a month's time. Now, Partner Re's decision to buy Switzerland-based rival Paris Re in a complex $2 billion deal will create a new top 5 player in the reinsurance market. And while equity analysts appear to view the deal positively, at least one has warned that events such as hurricane losses and counterbids could throw it off course. Patrick Thiel, the President and Chief Executive Officer of Partner Re, said this is an important acquisition for Partner Re as the enhanced market presence, risk diversification, capital strength and scale that it creates provides more balance, stability and opportunity for our company in the face of uncertain and volatile financial reinsurance markets. He said, "We believe this transaction provides excellent value for our shareholders over the longer term with limited risk." Thiel said that while both Partner Re and Paris Re are well positioned to achieve their strategic and financial goals on a standalone basis, we believe that this acquisition, which is expected to add $1.17 billion to Partner Re's shareholder equity, enhances our superior risk-adjusted returns going forward. Now, the deal is viewed positively by equity analysts. James Quinnan, equity analyst at Citigroup Global Markets, said the transaction is close to being a done deal. Quinn said, of the mixed bag of Bermuda reinsurers, Partner Re is arguably the strongest franchise and one of the best management track records. This makes the value of the paper part of the deal look very secure. The relative valuations of the two stocks also suggest this is a good price for Paris Re shareholders. Although Partner Re trades at a slight premium to book value, the company has a stronger franchise, better track record, higher expected return on equity and better share liquidity. We think the terms of the deal look fairly attractive to Paris Re shareholders, and we would recommend accepting the terms of the offer as currently stated. But Hawkins cautioned the lengthy time period involved in concluding the deal could make it subject to disruption. This appears to be a secure and friendly transaction between Paris Re and Partner Re, making a counterbid unlikely, in our opinion, but never impossible. With so long until the deal comes through, a hurricane and the renewal season, we believe the risks of outside events interrupting the transaction cannot be completely ruled out. And further news, Centata Insurance said it is on course to have more than 100,000 policyholders by the end of 2009, making it one of the fastest growing insurance companies in Ireland, the company's claimed. As of May this year, Dublin and Malta-based company has had more than 45,000 policyholders and written premiums in excess of 25 million euros. The 20-month-old company attributes much of its success to its decision to sell its products only via brokers rather than direct to the consumer. The company said one of its biggest assets is its IT system, which has received substantial investment. The full cycle online service, providing quotes within seconds, comprehensive online processing of policies, and point-of-sale documentation, has proved hugely popular with broker partners. The company has also unveiled a new-look website and brand with a bold slogan, "Insurance Changed for Good."